Alright, for this video we want to go through a sample form 709, which is U.S. gift and GST tax return, and this is going to be for the 2023 tax year. Now in this scenario we're going to have a married couple that are going to file a 709 and elect to split gifts for the year. So we've got the 709, which we'll go through. We've also got the form instructions for 2023, and then we've also got one slide here just covering some background on the 709, gift splitting issues, and then more details on the fact pattern. So generally these 709s are filed by individuals, so they're U.S. citizens or U.S. residents, and they make taxable gifts during the year. Now, the annual gift tax exclusion for 2023 is $17,000 per donor per recipient, or recipient being the donee. It goes up to $18,000 in 2024, and last year was $16,000 for 2022. Now, when we talk about gift splitting, married couples need to remember that each person gets their own lifetime gift tax exemption. So as of 2023, that was $12.92 million, and each person gets their annual exclusion per donee. So each person can donate up to that $17,000 per donee for the 2023 tax year before it becomes a taxable gift, right? That's the general rule. Now, when we talk about gift splitting, what gift splitting allows a married couple to do is it says, okay, if one spouse gifts property to a donee, the couple can elect to split that between the two of them. All right, so now gift splitting is available if the gift is made while the couple is married. So if they're divorced and the gift is made after by one person, you can't split that gift. So it's made while the couple's married. The spouses have to both be either a U.S. citizen or U.S. resident. The couple is still married at the end of the year. Or if you got divorced or you were widowed, you did not remarry by the end of the year. And that non-donor spouse that's consenting to the election does not have a general power of appointment over the property that was transferred. So really important to check these details and make sure that you do actually qualify to split the gift. Now, the other thing that a lot of people overlook is this is an all or nothing election. So the election applies to all gifts made during that period. So it's an annual election. So if you elect to split gifts, it means that all the gifts made by each spouse, you have to split all of them. You can't cherry pick which ones you want to split and then which ones you want to just be reported on one spouse's return. Now, another key thing to remember here is community property and separate property issues. So a gift of community property is deemed owned 1/2 by each spouse. That's kind of the general rule. So if you give community property, that should be reported as 1/2 on each spouse's gift tax return, and so no gift splitting election is required, right? Because it's community property. However, if it's later determined that you were wrong and that the property was actually separate property, then it means that all of that gift should have been attributed to the donor spouse because you didn't make that gift splitting election. So if you potentially have these issues and you have doubts about whether the character of the property is separate or community property, you should consider that gift splitting election to just eliminate the uncertainty. All right, so let's have a look at the fact pattern. So we have Jane Doe and John Doe legally married and have 2 sons, Adam and Brian. On Jan 1st, 2023, Jane made a cash gift of $34,000 to each son. And both Adam and Brian are going to be non-skip persons, right? They're not grandchildren. These aren't transfers to a trust. So $34,000 to each son directly. And the cash gifts came from a bank account in Jane's name only. Now, the $34,000 gift to each son exceeds the $17,000 annual exclusion for each donee, so it has to be reported on the 709, right? Because she gifted property in excess of that $17,000 per donee, so she's got to report it. Now, Jane and John are married, and so they agree that they're going to make this gift splitting election. So Jane is going to file the 709, and what we'll see is that John, although he may file if he wants to, he's not going to be required to file because they meet an exception for the dual filing. So exception 1 And we'll look at the instructions here. It says that, well, if one spouse makes the gifts, if only one spouse makes those gifts during the year, and the total value doesn't exceed double what the annual exclusion is. So in this case, it's $34,000 per donee, and all the gifts are present interest, then you only need to file one 709. Now, this is going to be the first Form 709 filed by either person, and so we'll see that when we look at Schedule B on prior filing. So let's have a look at the return, and we'll start going through this. So this is being filed by Jane. She's the donor. So Form 709, Jane Doe. We have her mailing address here, her Social Security. She is a resident of Pinellas County, Florida, and she is a U.S. citizen. Now, on item 8, the donor has not passed away, so she's not deceased, so that's blank. She's not extended the time to file the 709, so she's going to be filing her Form 1040 and her 709 before that April 15 deadline. Now, line 10, the total number of donees that's listed on Schedule A, it's going to be 2, right? Because we have one gift to Adam, we have one gift to Brian. Line 11A, have you, as the donor, previously filed any 709s? And our answer is no, right? So this is the very first one that Jane and John is filing. Item 12, so this is where we make that gift splitting election. So do you consent to have the gifts made by you and your spouse to third parties during the year considered as made one half by each, right? And so we're answering yes. So we're going to split gifts this year. Now the consenting spouse is the other person. So John Doe, we list John's Social Security number there. We've marked yes, they are married during the entire calendar year. And in item 17, we've marked no, John's not going to be submitting an additional return because they, as the couple, qualify for that exception. So they only need to file one Form 709. Now, as the consenting spouse, John does have to sign this. So this will be signed by Jane as the donor at the bottom, right? Signature of donor and dated. But the consenting spouse, John, also needs to sign and date this, right? If he doesn't sign it, then there's no consent there. Now, line 19, have we applied any DSU amounts? No. And then line 20, we are not reporting the transfer of any digital assets or financial interests in digital assets. So that's a no as well. All right, so now in part 2, the tax computation, line 1, Schedule A are those current year gifts, and Schedule B are the prior year gifts. Well, we'll see on Schedule B we don't have any prior years, so now we have to look at Schedule A and report those current year gifts. So Schedule A, computation and taxable gifts, is broken out into basically 4 parts. So part 1, we have the gifts that are only subject to federal gift taxes. So these are, what you'll see up here are gifts that are made of present interest to non-skip persons, right? So that's what we're working with here. Part 2 are direct skips that have GST and some federal gift tax components. And then part 3 are indirect skips and other transfers to trusts. And then lastly, we have part 4 here where we have our taxable gift reconciliation. So Schedule A, part 1 is what we're going to be working with here. So on line item A, yes or no, right? So no, we are not going to be having any gifts that reflect valuation discounts, right? This is just cash that's being contributed. So we've got a part 1 attached statement which provides more details on the gifts that are made. So let me scroll down to the Schedule A details. So we've listed both donees here. So we have Adam and Brian. Adam's full name, the address, his relationship to the donor, he's the son, and then description of the transfer. So we have a cash gift of $34,000, and then the same goes for Brian, right? So cash gift of $34,000. Now the basis is the cost basis, the adjusted cost basis of the property for the donor. So when Jane contributed the $34,000 worth of cash, the value of the cash is the same as her basis. So $34,000 in basis, $34,000 in value for the cash, and then the date the property was transferred. Now, because we have a gift splitting election, we do split this 50-50, and we report the net transfer of $17,000 as the piece attributed to Jane. So Jane is going to pick up $17K from the transfer from Adam, and 17 from the transfer from Brian, and then the split component is attributed to her spouse, John Doe. So the total amounts of transfer going back to Schedule A, Part 1, Column H is $34,000. So if I scroll back up here to Column H, that's where we report the $34K. And then we can move on to Part 4 with our taxable gift reconciliation. The total value of the gifts for this donor, so Jane, is the $34,000 amount, right? So 17 to Adam, 17 to Brian. The annual exclusions for all these, it's still the $17,000 per donee. So she gets a $17,000 exclusion for the transfer to Adam and an additional $17,000 for the transfer to Brian. So we have $17K times 2 is also the $34,000. So the includable gifts here are $0. Now Jane doesn't have any deductions or any GST, so the total taxable gifts for the period is going to be $0 for the year. Now in Schedule B, just to highlight this, this is the very first 709 being filed. So if we had prior years filed, we would list those years, the office where it was filed, and then to the extent we had any taxable gifts or applicable credit that was used, we would list those amounts as well. But in our case, we don't have any of those, so the amounts reported up on lines 1 and 2 are also just 0. So the total taxable gifts for the year is 0, which doesn't require us to calculate any tax for the period on lines 4 and 5. We should still pull through the amount, the applicable credit amount that's available for the year. So if I have a look at the form instructions here, and we go down to the exclusion and credit amount tables, we can see that for the 2023 year, the exclusion is $12,920,000, so that's the $12.92 million, and we get a 5.1138 or $5,113,800 credit that can be reported up on line 7. So line 8 is blank because we don't have any amounts from Schedule B for the prior periods. We don't have any gifts that were within this date range, right, 76 to 77. So the total balance for the year remains at the $5,113,800. All right, so that is the long and short of the 709 for split gifts. I hope that was helpful. If you have any questions, feel free to leave a comment below. Happy to answer any I can. And as always, I appreciate you watching. I look forward to seeing you on the next video. Thank you.